Now speaking, Shanda Brashears, Senior Vice President, Investor Relations. Cinemark Holdings Incorporated hosted its first quarter 2023 earnings release conference call on April 8, 2023. The call was led by Sean Gamble, President and Chief Executive Officer, and Melissa Thomas, Chief Financial Officer. During the call, caution that statements made may be forward-looking and involve risks. Non-GAAP financial measures were also discussed and can be found on the company's website. Now speaking, Sean Gamble, President and Chief Executive Officer. Cinemark experienced a 30% year-over-year increase in North American box office for Q1 2023, with the help of strong carryover from Avatar, The Way of Water and Puss in Boots, The Last Wish, as well as other hits like Creed 3, Scream V, John Wick 4, Megan, Dungeons & Dragons, Honor Among Thieves, Jesus Revolution, A Man Called Otto, Cocaine Bear, and Ant-Man and the Wasp, Quantumania. April box office was up 55% year-over-year, and content volume was consistent with pre-pandemic output, spurred by releases such as Air, Evil Dead Rise, Renfield, The Pope's Exorcist, The Covenant, and Super Mario Bros. CinemaCon featured new trailers for upcoming films across every genre, such as The Little Mermaid, Wish, Elemental, Wonka, Barbie, Haunted Mansion, Migration, Trolls Band Together, Teenage Mutant Ninja Turtles, Mutant Mayhem, Blue Beetle, Aquaman and the Lost Kingdom, The Marvels, Kraven, The Hunter, Guardians of the Galaxy 3, Spider-Man, Across the Spider-Verse, Indiana Jones and the Dial of Destiny, Mission Impossible Dead Reckoning Part 1, Fast X, Transformers, Rise of the Beasts, Hunger Games, The Ballad of Songbirds and Snakes, Gran Turismo, and The Equalizer 3. Cinemark entertained 43 million moviegoers worldwide in 1Q, generating total revenue growth of 33% and a sizable increase in adjusted EBITDA of over 240% to $86 million with an adjusted EBITDA margin of 14.1%. Cinemark also increased their market share by 100 basis points compared to pre-pandemic averages and paid down a further $100 million of debt they secured during the pandemic. Film volume is tracking better than anticipated, with 110 titles now dated in second quarter volume resembling pre-pandemic levels. Now speaking, Melissa Thomas, Chief Financial Officer. Cinemark Holdings Incorporated reported strong results in Q1, with 43 million global guests and total revenue of $610 million, a 33% increase year-over-year. Adjusted EBITDA increased 242% to $86 million, resulting in a 14% margin. Domestic segment served 25.2 million patrons, generating $479.1 million in revenue and 13.2% adjusted EBITDA margin. International segment had 17.7 million visitors and generated $131.6 million in revenue, with 17.3% adjusted EBITDA margin. Net loss attributable to Cinemark Holdings was $3.1 million, with $650 million cash on hand, positive operating cash flow, and $100 million redeemed from 8.75% senior secured notes. Capital expenditures is estimated at $150 million for 2021. Roth MKM analyst Eric Handler inquired, I want to know what percentage of box office revenue was premium in comparison to the prior year, how movie club subscription numbers have changed since increased product depth, and if there has been any progress with credit redemption. Sean Gamble replied, we saw a 12.5% premium box office in the US, and about 12% overall for the quarter. We continued to see an over-indexing of consumers upgrading to premium formats with regard to viewing and food/beverage consumption. Movie Club 2 sustained positive trends, exceeding 1.1 million members, though utilization of credits is slightly down from pre-pandemic levels. New members are consuming at a level consistent with the earliest members. J.P. Morgan Chase & Company analyst David Karnofsky inquired, are we able to sustain current market share levels? Did film mix and rent and advertising help with the quarter's margins, and does the spend come back to us in the form of market share gains? Sean Gamble replied, we benefited from well-received content domestically and in Latin America, with films such as The Puss in Boots, Megan, Scream V and Jesus Revolution. We expect our market share to increase by 100 basis points relative to pre-pandemic levels going forward. Melissa Thomas replied, I expect our film rental and advertising rates to be impacted by larger tentpole films in 2022, with some offsets from modified system rental terms due to the shortened theatrical window. Our marketing spend will remain based on expected attendance and ROI, and won't have a noticeable year-over-year increase as a percentage of admissions revenue. Wells Fargo Securities analyst Omar Mejias inquired, have the writers' strike and potential for other unions to follow had an impact on the timeline of film production? What is the length of a strike that would have an impact on future production? Sean Gamble replied, the Writers Guild strike is something we are all watching closely, as it has a meaningful impact on many people. At this point, it is too soon to speculate the ultimate impact, which depends on the length of the strike. Fortunately, films scheduled for 2019 and 2020 are unlikely to be materially affected due to the long lead time of making films, although a longer strike would pose a greater risk. In the past, the 2007 to 2008 100-day Writers Guild strike had some impact, but the studios were able to pull forward and work around the disruption due to the long lead times. We will have to wait and see how things progress, and at what point the strike has a tipping point in terms of impact. Wells Fargo Securities analyst Omar Mejias inquired, have U.S. concession costs as a percentage of revenue been higher than expected, and how have salary and labor costs improved? What should we expect in terms of inflationary cost pressures for the remainder of the year? Melissa Thomas replied, COGS rate in Q1 of 2022 benefited from purchase of generic popcorn bags, inventory on hand and lower prices purchased in late 2021. In the last 9 months of 2022, COGS rate was slightly up from Q1 of 2023. Expect modest pressure in COGS rate relative to 2022 due to inflationary commodity pressure, offset by rising sugar prices. Labor in Q1 benefited from outperformance in box office but expect hours to step up as attendance recovers and wage pressure to subside. Government-mandated increases expected for salaries and wages. Macquarie Group analyst Aaron Lee inquired, I have heard that movie-going is still more affordable than other entertainment options. Can you tell me what opportunities there are for organic price increases? Sean Gamble replied, we use a lot of data to carefully adjust pricing in each theater-by-theater market. We believe finely tuning prices has given us positive results and increased market share in Canada. We think there is more opportunity going forward with our pricing strategies. Melissa Thomas replied, since Q1 of 2019, we have seen a big lift on the concession side and a nice lift on ETPs. However, our prices have increased below inflation, indicating there is room for further growth. Macquarie Group analyst Aaron Lee inquired, have I provided any information on the opportunities to expand beyond the current portfolio and what my appetite is for such an expansion, or how this ranks among my priorities? Sean Gamble replied, we are constantly looking for the right profile for our theater/circuit portfolio, and have been optimizing our footprint by both finding new opportunities in existing or new markets and trimming down on underperforming theaters. We are monitoring the moving pieces of our industry and see potential opportunities to expand going forward. We are optimistic about pursuing further opportunities in the next year or two while also strengthening our balance sheet. Barrington research analyst Jim Goss inquired, have you seen more potential for mergers and acquisitions in Latin America versus the U.S. as a way to increase portfolio growth? Sean Gamble replied, in regards to M&A, the U.S. is seen as having more potential than Latin America. The U.S. is a more fragmented market, while LATAM's box office is driven by 2 or 3 circuits that are owned by well-financed organizations or wealthy families/institutions. As these entities own malls or theaters strategically, it is. Barrington research analyst Jim Goss inquired, have any discussions at CinemaCon addressed the role of theaters in filling their schedule with blockbusters, and how to ensure good windows usage and counter-programming as theaters reopen? Sean Gamble replied, at CinemaCon, a wide range of films were showcased including blockbusters, romantic comedies, R-rated comedies, faith-based and adult dramas. Alternative content such as concerts, anime, serialized content and premiere events have been discussed with the studios, with alternative content contributing 8% of box office in Q1 2020 compared to its typical 2%. The potential for alternative content to contribute 5+% of box office exists. Barrington research analyst Jim Goss inquired, have you seen any drop in streaming customers since the pandemic began, both from customers who may have already been streaming less frequently prior to the pandemic and those who may not return at all? Sean Gamble replied, we have not seen any evidence that streaming and theatrical viewing are competing with each other. In fact, analytics show the most active moviegoers are also the most active streamers, while those who don't go to the movies consume the least content on streaming services. The biggest weekend of movie-going ever in the U.S., Avengers Endgame, was also the biggest night in television history, Game of Thrones. This shows streaming and theatrical can coexist. We also see series on streaming platforms coming out of movies, suggesting both can build off each other. Overall, we think these are great opportunities for complementary programming and do not see any data indicating otherwise. Wells Fargo securities analyst Omar Mejias inquired, have the operational efficiency improvements made during the pandemic enabled you to return to pre-pandemic margin levels, even with reduced attendance at the box office? Melissa Thomas replied, in Q1, our adjusted EBITDA margin was 14.1% globally despite attendance being only 70% of 2019 levels. Our goal is to return to pre-pandemic adjusted EBITDA margins in the low 20% range. Drivers of this include market share, per caps, ticket prices, inflation and more. We believe we can continue to expand margins in 2023 as box office recovers further and have initiatives to achieve pre-pandemic margins over the longer term. Sean Gamble replied, Cinemark has experienced positive momentum and progress this year, with consumers continuing to demonstrate strong demand for the type of experiences they provide. Studios are recognizing the value of exclusive theatrical releases and the pipeline of content is recovering towards pre-pandemic levels. There are also opportunities to grow and strengthen Cinemark.